So welcome everybody to Enhancing the Accountant Bookkeeper Connection series featuring my friend and my accountant, Jonathan Carter from Cata Accounting. So hello, I am Tanya Hiltz, a certified professional bookkeeper and an accredited impactful advisor. And I am here because I am passionate about collaboration. And you can find me at Tanya's Bootcamp, Facebook, Twitter, and Instagram. A little bit about me, Intuit's Global Firm of the Future for 2018. I've been named as Insightful Accountant Top 100 Pro Advisor for 2018 through 2022. And in 2020, also recognized as the top Canadian Pro Advisor. I'm the founder of Cloud Business Services and Tanya's Bookkeepers Bootcamp. I'm a level 5 certified advisor through Mentor Plus, where I received my AIA designation, a member of the Intuit Trainer Writer Network, and I currently serve on CPB Canada Public Affairs Task Force and the Ethics Committee. And the best way to predict the future is to create it. I think this might be last month's. Maybe, but doesn't matter. It's the best way to predict the future is to create it, and we, can be responsible to create our own destinies. And it fell in with, I think, last month's topic, maybe this month's topic. I can't remember. It's what happens when I go on vacation. Anyway, so this webinar will qualify for CPD credits through CPB Canada. There are 2 polls that must both be answered in order to qualify, and a recording of the webinar and your CPD credits will be emailed within 2 business days. Important, if you do not receive it, you may have unsubscribed. If you have unsubscribed to Flowdesk, which is what we use, we cannot resubscribe you. So you do need to go through, resubscribe yourself and verify. If you do still have issues, just email me at bootcamp@mycbs.ca that you've resubscribed, and to please resend, because everything just gets sent out in a mass email. And do not unsubscribe unless you don't want to hear from us ever again, or you're going to have to repeat this again to get your CPD credits next time. And a little bit about Jonathan Carter. So we've been collaborating with Jonathan and his team for a number of years. We have multiple mutual clients. He works in QBO, and that's what we love about him and his team. He pays attention to detail and has outstanding customer service. And just one of the many, many reasons why we choose to collaborate with Jonathan. So, Jonathan, you can take it away. I will stop sharing and you can start sharing.
No, I can't.
Oh, then try again. Should be good now.
All right, there we are. Okay, so yeah, I'm Jonathan Carter, founder of Cata Accounting Solutions Professional Corporation. I was a member of the inaugural Intuit Accountants Council. That was an amazing opportunity and has created a long-standing relationship with Intuit. 2018, I received the Inspire Accountant Award for contributions to future of the industry. I'm an elite pro advisor, QBO Advanced certified. Most of the people on our team are QBO Advanced certified now. I was Insightful Accountant Top 100 2021 and 2022. We like to work with thought leaders. We like to work with forward-looking companies, and we love working with bookkeeping companies. And we've been fortunate enough to meet a lot and be able to go through some amazing journeys with different people when it comes to their businesses and our business and their clients and our clients. And referrals can sometimes get bounced around a bit, and it's really nice to have the community that we have. So I'm going to skip along pretty quickly today because I think this is really important, and it is, I know we're going to go off the rails 100%. What I really want to talk about is our risk management. This really came from a conversation that Tanya and I were having about the Silicon Valley Bank collapse and the ensuing, are the apps we're working with affected and things like that. So it just exposed part of the risk. And there's been some other risk situations that Tanya and I have talked about in confidence in the past, and I'll leave it if she wants to bring them up later, but let's get into it. So we're going to talk about what is risk management, why we should care about it, how understanding risk helps us help our clients more, the decisions we have to make, and keep in mind, not making a decision is still making a decision. Talking a bit, because we can only touch the tip of the iceberg, about the risks we take as business owners. and some tools to manage risk. And then, of course, summary and questions. I'm hoping this is going to be an animated discussion, and I'm hoping that I'm going to hear some new ideas that I have not thought about before. So this is a completely subjective poll question, and it's going to be different for everybody. Tanya, you're going to have to make it so that the panelists can vote or can take the poll question. But these are some areas where, you know, that I thought might be good to bring up as to, you know, some of the risks that are possible. So I'm going to move my poll question. Go ahead and launch the poll. I saw it there. And I'm just going to move it off my screen so people can
Yeah,
see
I just
mine.
had to close it down again because it didn't give me the option to
Oh,
allow panelists to vote. Here we go. Okay, so let me try this again. Relaunch. I'm going to continue. Okay, so panelists should be able to vote now.
so again,
And if
completely
not, just please
subjective.
type it in the chat and I will make sure. But if, yeah, okay, it looks like we can vote in here. So that's perfect.
It doesn't have to be business related question, related risk. It could be on the personal side, things like it can be whatever you want. So let's see what happens there. I'm curious to see what people have to say.
All right, so it looks like we've got everybody voted. So we will go ahead and end the poll and share the results.
Legal compliance risk and risks I don't know about.
Yeah, I can't vote, but mine is risks I don't yet know about, because with my background, I'm very much onto legal compliance and of course interest rate and, you know, tech and all of this stuff. I look into all of that. But to me, the scariest thing is stuff I don't know about yet.
Yeah. And I mean, we can try to mitigate the risks we are aware of, and we can try to be educated about the risks we're not aware of. But yeah, you're right. Like, I mean, things can happen that you never foresaw coming. That's that. So risk management is the process of identifying, assessing, and controlling risks to an organization's capital and earnings. I pulled that off of IBM's literature on, or public facing literature about risk management. We all take risks the minute we open our business. All of your clients do as well. You know, we've seen clients be very successful. We've also seen clients crash and burn. Knowing and understanding what is creating risk is kind of the first step to mitigating or managing that risk. And of course, the best mitigation strategy is paying attention. So as bookkeepers, I'm sure we're all familiar with those individuals who like to know don't even want to know what their numbers were. They just want their taxes filed. They don't care about, you know, responding to questions. They're not giving you answers. They're not submitting documentation. They're not paying attention. And that's an area where I think, like, we're, as a community, we're constantly preaching that message. And you know, I think that's one place. Tanya Woods Richardson, who is an amazing speaker. If you haven't seen her, if you have the opportunity, I believe her site is called Nail the Numbers. She's a money coach, and she's a tremendous coach. You can check our newsletter if you get it. We have an affiliate link there, but she really does a good job of helping break this down into a non-financial person's understanding. Another thing that I think I'd like to point out at this point in time is there's a lot of risk to saying yes. And where I have seen people, entrepreneurs, implode or explode or just like disappear off the face of the planet, things like that, have really had a lot of times had to do with them trying to do too much, right? Like, we are really supposed to have one core thing that we're working at, or 2 or 3 core things we're working at. We can't do everything, you know what I mean? And trying to do everything is just asking for a disaster to happen.
Sorry, can I just jump in here for a
Please.
sec, Jonathan? Just because you
Please.
mentioned Tanya Woods Richardson, I completely agree. She blew me away when I saw her speak at CPB Canada and talks about this. I am going to send out with the email a link. So she has a course. I think, Jonathan, you took it as well with Julia. I've taken it a few times, and it's called the 5-Day Wake Up Challenge. And that kind of reverse engineers what we need in a way that is really, really good. It helps me, you know, understand certain things a little bit better myself, but also how to explain it to clients better. And this course is regular $990. I do know that she gave for CPB Canada, you got in for free. You can get different codes out there. I've got a code that will get you that completely free, because I think there's some of them you can get one nail, she charges $99 for it, something like that. But I've got it that will get you completely free. So I will send that out. The direct link with my coupon code to take that completely free 5-day wake up call for anybody who wants to use it, for those who are here live.
For just as a heads up, have your books in order. Have your
Yes.
books in order before you do that, because there's homework every day. And to really have the impact it needs to have, you have to do the homework. So
Yeah, and the
you have to
homework,
time it too.
it's really, so you meet for about 25 minutes a day, and there's really about 15-20 minutes of homework a day, and it's 5 days. So it's not a lot. You're not really looking at so much at your books. It's more looking at your personal budget to figure out what you need to make on your business. So, but it's literally pull up your bank statements and kind of go through your last 2 months of bank statements and see like where you're spending your money. So it's not that difficult, but yes, if you've got your books up to date, it will absolutely help make things a lot clearer for you, especially if you're a sole prop and you've got some things that, you know, are that you're putting through, you know, that is in your personal name, but you're putting through the business. So yeah, it'll make that a lot easier to do that. Okay,
Awesome.
but go ahead, Jonathan.
All right,
Sorry,
continuing
throw
on.
that out, that I was going to throw that in there.
So risks exist everywhere. They can be managed and mitigated if approached properly. Risks have to be taken in life. I mean, you take a risk every time you walk out your door, you get in the car and you go somewhere, you're taking a risk. There's always going to be some degree of unknown risk. And risk can destroy everything we've worked for. So just to have a quick kind of aside here, a big part of the problem that came to light with what was it, Silvergate, Silicon Valley Bank, and I can't remember, there was a third bank. They all collapsed within the span of about 10 days. And what it was they weren't managing interest rate risk appropriately. They were buying long-term treasury bonds that had to be sold at a loss to cover their deposit withdrawals, and it sank the banks. They could have been buying shorter term. They could have been adjusting as they realized that the interest rate environment was going to go up. But apparently their chief risk officers were not acting as appropriately as a bank institution should.
Well,
and that was a big part of what led to it. Also, the high risk they were taking on their loans.
of course, and just to throw out there for those in Canada and the States, because I've done a lot of research on this, and of course, I think we all know this is kind of what started the big, Great Depression of 1929, just on a bigger scale. But Canada and the UK does have certain banking rules that do give us a little bit more protection. Not to say that we still could not be in this position, but in Canada and the UK, there is only a certain percentage that the banks are allowed to risk of the money, whereas in the States, it's very, very different. But it still does not wipe out the risk completely, because otherwise there would be no money loaned out, right? So
it would be interesting. I'm going to go on a bit of a tangent here. So it would be interesting. There's a podcast that I listen to from time to time, FinTech Insider. Great information there, but it's not necessarily about bookkeeping and accounting. It could be about all kinds of other stuff, Alipay, Google Pay, interbank, the LIBOR rate, all kinds of different things. But one of the things that came up there was how North America is so behind in developing fintech. And the biggest problem is there are 50 different banking jurisdictions in the United States. So, yep.
I can speak to that because when I moved here in 1998 from England, I could not understand why the banking technology was a good 15 to 20 years behind what I used to in England, to the point where I had to go to my local branch to do anything.
Yeah.
And I remember standing there just looking at the person, because I was 20 something, early 20s when I moved here. So in my memory, I'd never had to go to a local branch to do anything in my entire life. And I'd never seen anyone had to do it. So I was like, I don't understand. Could you explain to me again why I have to be in that branch over there to do what I want to do? It just blew my mind. And that was like, I'm too terrified to say 25 years ago, 26 years ago. And even now, you're barely at the level here that
We
we were
were.
at when I moved. Barely.
So for those who don't know, I taught English in Japan for a while, and same thing, like absolutely blown away. When I moved back in 2007, the cell phone technology was antiquated compared to what we were using from 2002 in Japan. And like, it's amazing how much these things hold up, but it's like the mitigation of one risk. So the introduction of banking regulations creates an offsetting kind of consequence that wasn't really thought about. Lifting those regulations then also creates situations like Silicon Valley Bank. So it's interesting how it's all kind of a balancing act. And you sometimes will have to sacrifice in one realm to mitigate risk in another. So I'm going to move on, but it's fascinating stuff because you have to make decisions, right? And not making a decision is still making a decision to not make a decision, right? Understanding risk exposure will help. Understanding your risk tolerance will help. I think that even though most of us might consider ourselves conservative, we took huge risks by starting businesses. And, you know, understanding that our risk tolerance is high compared to the general public. And our risk exposure is also very high compared to the general public. So we need to be more educated. We need to be more well-informed than the average Joe. And there are many factors that can come into your decision-making process. I mean, it could be, we're just talking about trying to introduce bank regulation to make it safer and whatnot. But because there's 50 jurisdictions, no entrepreneurs want to come bring their products here right away because there's 50 different sets of rules that they have to follow, which impedes the development locally of that tech sector. So has anybody ever not made a decision that's resulted in a negative consequence for you? Or a missed opportunity? Yep.
Sure.
Thanks for sharing.
It's more of a personal one, but it's
That's okay.
the first thing that just jumped into my head. So we just happened to be speaking. So my daughter is upset with me that I chose not to give her the chickenpox vaccine because we were talking about vaccines. And I said to, you know, and I guess, you know, the controversy with what they're saying with the COVID vaccines. And I said, you know, I didn't do this because it was so new. It literally had been out months when she hit 6 months old to be able to get it, or maybe just starting school or whatever. So I wanted to wait. Well, she ended up getting chickenpox a month and a half into kindergarten. Should have known. So I'm like, okay, that took that away. Well, now when she's upset with me and when she watches this to edit this video, she's going to be like, Mom, but she now is like, okay, because of that decision, that puts her at a much higher risk for shingles. And we just talked about that last week. So that's just an example of not making a decision and waiting to see what's going to happen, forced it into something that we don't know what the risks of that are, may or may not be. Yeah. So there's one thing.
Here's a scenario for you. You're working on a bookkeeping client. They're one of those ones who hasn't answered questions regularly. You're still trying to get caught up from when you originally onboarded them. You're looking at the information, the amount of money coming in, the amount of money coming out. There's the risk that you're not going to get paid, but yet you didn't take a retainer. You didn't, ensure that you had a pre-authorized credit card that could be run or something like that. Or how about that customer who you do have pre-authorized credit card for, you run it and it gets declined. What's the action that you take in that role? Like, these are things where every one of us has probably eaten some bad debt over the years because we failed to take action when we saw a risk presented to us. It's something to just another one of many, many things to keep in mind. So understanding risk and understanding risk can help our clients. Tell me if any of this stuff is familiar. Incomplete and outdated information. I think every client we have, except for two, are probably suffering to a minor degree for this. Some of them a bit more of a degree, but I can say with pretty straight confidence that two of them are up to date as of like last week, but the vast majority are. Documentation risk, names matter. Has anybody ever seen the legal invoice that the customer puts through as part of their bookkeeping or part of their company expenses? The invoice is named to them. It has to do with business matters, but it's named to them. Legal gets reviewed quite a bit. We have a couple of those going on right now. And, you know, if you're doing corporate taxes, make sure you're using Giphy appropriately and that you're not putting things like coaching or bookkeeping fees under legal expenses, because that will encourage the triggering of a review of that category. But, you know, getting things that are incomplete or insufficient, the customer needs to push back. It's their money. It's their right to protect themselves. So if you get that invoice that is addressed to the customer but has to do with the business, the customer should be pushing back and say, hey, this should be billed to my business, not to me personally. Because a first level CRA agent is going to come in there and say, that's to them. No, we're disallowing that. At least that's been my experience. Another thing is not getting the documentation and just accepting that, okay, they said it was legal expense, so we're going to book it as legal expense. Well, maybe it was for their divorce. Maybe it was, you know, they got sued over a car accident or something like that. Those kind of things we need to keep track of, and we need to push back on. One thing I say to clients frequently who I have one in particular that drives me nuts about this: no paper, no payment. If you as a vendor, I don't care if you're a subcontractor, what your situation is, great. You need the money, give me the invoice. No invoice, no payment, period. The minute you provide that payment, they have no incentive to give you an invoice, period. You're probably never going to get it. On a CRA review, the question could be asked, how can you prove this is a business expense? Okay, it's personal. We're going to say it's personal. Now you have to pay tax on it, even though it was a business expense. So it's something else to keep in mind. Financial control risk. This is particularly bad with entrepreneurs who go from like a very small team to a larger team, and they maintain a single signing authority who can sign for hundreds of thousands of dollars, or who can make decisions without any oversight. And I mean, sometimes that's required to get things done, but there's a time where financial control should be implemented. So one of the great things I love about the app world is we never have to have direct access to a customer's bank account. There's no reason for us to have direct access to a customer's bank account. If it's to get statements or something like that, one of the read-only cards, you know, there's still a bit of risk there, right? If you have the credentials to log on, there could be additional information taken from that and used by part of your team to make something happen. Bad structures or no insurance. I've seen 2 clients this year doing corporate tax that have no insurance expense. I brought it up with both of them, and their answers are very laissez-faire. Like it's almost like they don't care. It's like, oh, my insurance broker says it's all good. It's like, great, get it in writing, get your policy, charge back the business for that portion of your policy you're paying personal that relates to your corporation. Somebody telling you it's all good is BS. We all know salespeople will tell us anything to make a sale. So keep that in mind. When you're dealing with insurance salespeople, they're salespeople. The bad structure really comes more to like the corporate structure, like who is ownership, who owns what companies own, if they're sisters, if they're their parents, different things like that. It can be helpful for mitigating risk, but it can also create additional risk. So for instance, if there's a husband-wife team, one owns one company that's making money, one owns another company that's making money, you want a dividend out of the one that's making money, well, guess what? You can only dividend to the one person. You could pay a management bonus to the other, but then you're incurring a source deduction, creating a tax consequence, things like that. So that is something I've seen a couple of times this tax season. Unnecessary tax tax risk. I'm sure we've all seen that. And it usually stems from number one or number two, right? People not taking the not getting their information up to date, bad documentation, not having documentation, claiming ITCs incorrectly. Oh, well, I just booked 13% of every Air Canada bill that crosses my desk. We know that airlines, they don't charge HST on everything, right? They don't charge GST on everything. It's important to tie to those documents. And legal risk. And I've seen this a lot. I've seen this in our industry a lot, where people are just absolutely operating with impunity and completely disregarding legal obligations. I've seen stuff where customers are like, I hired a bookkeeper, so it's their job, and I'm not going to hold them to account, and I'm just going to keep paying them and hope. Well, no, you need to monitor the people you're working with. As business owners, we need to monitor our subcontractors. We need to make sure they're doing the right job. We need to create mechanisms of oversight, because if the customer gets pissed and sues, they're not suing the subcontractor, they're suing us, right? So some things to keep in mind. Does anybody else come across a risk when you're considering your own business that really helps you understand or provide value to one of your clients? Does that ever happen for anybody? Let me talk about a quick one that I see often. So everyone knows what the small business deduction is in Canada. So the small business deduction, the lifetime capital gains exemption, these can be affected by inactive assets in the corporation. So for instance, I have one client, she's been very successful. She's doing a great job, but she just keeps accruing cash in the company bank account. And she's not doing anything with it. She's not investing it. She's not taking it out to herself and whatnot. And it's kind of the point where of the assets in the corporation, cash is approximately 60% of her assets in the corporation. It's approximately 2 years worth of cash flow in her bank account. So A, we have an interest rate risk. She's not earning on that income. B, we have a tax risk, where the small business deduction could be at risk if she did start investing and start doing that. C, we have a lifetime capital gains purity risk, in that there's a lot of inactive assets in the corporation. So these kind of things can be, resolved over time in a more tax efficient manner. There can be structures that can be done. There can be dividends, there can be management bonuses, there can be all sorts of different things that can happen to help resolve that kind of risk. But essentially, that money is losing buying power every day it sits in the bank, right? We all know about inflation, and that's a big thing that we're all facing right now. Just some other things, inflation are really considered kind of interest rate risk. And it's interesting because it ties back to our pricing, right? Like our employees are becoming more expensive. Our apps are becoming more expensive. Our overhead, our rent, all those things, none of them are going down in nature. So if our prices aren't going up, our margins are shrinking, and we're setting ourselves up for a future financial risk. And I don't know about everybody else here, but I didn't get into this business to sacrifice myself so that somebody else could save some money. What else? Reputational risk. I take a reputational risk every time I do one of these webinars. I try to keep things broad and generic. And if I don't know the answer to a question, I'm not going to pretend I know and answer wrong. And I have done that in the past. And luckily, we have a great community, and people have, called me out in an appropriate manner and helped me get corrective statements out there. So thank you to those people. Technological risk. I think every one of us probably had that flash in our mind when the SVB collapse was happening. It's like, what of my apps are going to go down next week? What are we going to do? How are we going to pivot if Dex, who was affected, if Dex goes down? But Dex, they responded really quickly to the community. The SVB branch in UK got sold to HSBC. So they're now with HSBC, everything is good. But these are things that we need to be thinking about. Do we want to jump on every shiny new tool? How well are people funded? And remember, salespeople are going to tell you everything is good. I don't think there's an ethical code of conduct for salespeople, to be frank. So it's something to take with a grain of salt. What we're doing. Market risk, things like, we could be entering a recession. Do we have clients who are, very affected by recession, or do we have clients who are recession-proof businesses? I mean, it's tough to have the best of everything and none of the worst, but it's something to consider and something to think about. I know COVID was really bad for a lot of bookkeepers who were focused on retail, travel, hospitality, restaurants, things like that. I mean, things got shut down overnight for some. So, is there any of these risks that anybody else wants to bring up, talk about? Does anybody have any interesting stories to talk about? Okay, not as interactive as I was hoping for today. But let's go. Yeah. Go ahead, Carol.
I was just going to say that, when you talk about that, the risk and reputational, it's when I had a client I took on before I did as much vetting as I do now. I had taken on a client and he needed his books all up to date. And so I'd given him a price, and then I said, oh, and the bank recs aren't done. Those need to be done too. Well, why? Well, because that's part of doing your bookkeeping, is confirming everything bounces to the bank, which is the crux of your business. Well, I don't want to pay for that. I said, well, it has to be done. So anyways, a couple of days later, he phoned back and says, I found an accountant who will do my books without doing the bank recs. And she was a CGA. I looked her up and I just said, well, no problem. Come get your books. And I let him go.
That's unbelievable. But I've seen stuff like that, I've seen accountants give advice that somebody should not incorporate because it's a hassle. So there's no actual consideration of tax consequences or structure or anything. It's just like, it's going to be a pain in my butt, so don't do it. That's not really like good advice.
No.
And I've also seen situations where, and this has happened. So as people know, if you file taxes in Canada, CRA tracks you and they pay attention to what's going on with your clients and their books. So if one of your clients gets caught doing something fishy, guess what? There's a good chance that they're going to investigate your other clients for that. Now, it might be more than one client that would have to have that come up for it to really become a problem. But I think I've shared this story before. There was an accountant who was a CPA. Well, actually, I think it was before the merger. And his price for taxes was half your refund. And we all know that not everybody's entitled to a refund. This is an absolute scam. Of course, this guy ended up going to jail, but all his clients paid the price. Right?
And another example is and I can't remember his name, but he was an accountant in Toronto. I do believe he's out of jail now, but I lost multiple clients to him because he did the Toronto Police Services. And I would not let them write off their mileage and meals and all of that stuff to and from the courthouse on their days off, because they did not have the statement of conditions of employment. And I said, no, you have to have this in order to write any of that off. No, he'll do it. Tens of thousands of dollars these clients had to pay back. He did go to jail, and it was because they found one, they found another. Oh, they looked at their notes. So yes, they do have files. He did go to jail. It was definitely, he knew what he was doing was wrong and he did it. But the client still had to pay. They had to pay penalties and interest, and then they had to try to sue him personally to get some of that back. And he went to jail shortly after I moved here, and he got 10 years. So like you say, he's probably out, because I've been here 13 years now, but I don't know of anybody who got any of that back, who did try to go after him. He just went bankruptcy and walked away. Now his future is toast, but the clients paid the price.
Is his future really toast though? Like, how hard is it? He might not be able to use the designation anymore by law, but he could still be using the designation. I'm just going to be honest, CPA isn't great at enforcing that kind of stuff. And they can't enforce it if you're a CPA from another jurisdiction, like say Illinois or Delaware or something. right?
Well, yeah,
So,
that's true.
I mean, this person could still be out there practicing, building up a new business, doing the same things. But if the client doesn't investigate who they're working with, it could be something could come from that, right?
Yep.
And I think that brings to another interesting point is relationship risk, right? Like, I mean, we have relationships with each other, with our clients, with our, you know, with our team. And there can be situations where a relationship can turn sour and be seriously damaging, right? Like a client going around and bad mouthing you. Oh no, this guy sucks. He made me pay tax. I got this new accountant who I never pay any tax, right? Those kind of things. And those are the stories that resonate. It's like, oh, you don't pay any tax? Oh, I want to talk to that accountant because they think it's okay. And it's become a bit of a selling point. Another relationship risk to consider is in choosing your referral partners. I have had referral partners where it's like, okay, we've had a conversation. Here's the US side of the return. I'll do the Canadian. Let me know when the US is done so I can take that and do that. And then, you know, April 25th rolls around and say, hey, so how'd the US taxes go? I'm ready to do the Canadian. It's like, oh, I just did them too. So they essentially just took the client, even though you had another agreement. So I think that's something to keep in mind. Also too, like a team member getting upset could cause a lot of damage to a business. And as business owners, we are starting to get a little bit more rights with regards to stuff like time theft. I thought that was a very interesting case that came down a while ago. There was a person who was terminated from a cloud accounting firm for lack of productivity. She sued them for wrongful dismissal. They had, I can't remember, I think it's called All Track or Track All or something, installed on all laptops, and they were able to show that she had been stealing time. She was ordered to repay $3,000 of salary. And that is the first, that's a big precedence. That's a big precedence because now time theft is something that can go, it's not just a sunk cost to business anymore. There could be the potential for something more. Strategic risk. I think we have a lot of colleagues who are still very old school, who are not even recognizing the strategic risk they're taking by maintaining a very antiquated system of doing business. And then at the same time, I think as thought leaders, as people who are in the cloud bookkeeping, cloud accounting space, we're taking a lot of strategic risk by signing up with these apps and these app partners and creating these ecosystems, because if something goes wrong, it's the first stop for the client that's not going to be the app partner. The first stop is going to be that. So those are things to keep in mind. Insurance is a big question. I'd love to like get a professional on here to talk about it, who will talk frankly and not just try and sell. Because a lot of the insurance that is provided through our societies, I know CPB is pretty good with this. CPB's insurance packages are good, but they don't apply to my situation, and CPAs are not great. They just finally introduced cyber insurance as a regular part of your thing like 2 years ago. It's like, come on, I've been asking for that since 2014. So. Concentration risk. This is something I wanted to bring up just real quickly. I see you, Kathy. Concentration risk is when you have too much of your business with one client or one's situation, and then your situation could be drastically affected by that going down. So choosing your partners is important. I feel pretty confident with QuickBooks, it's not going anywhere. I feel very confident that Google's not going anywhere. So those are some of the areas where there is a lot of concentration risk for our firm. But I have seen clients who they have 80% of their revenues from one client. That could be a big problem. They decide to bring that job in-house. How are you going to pay your overhead? Those are some important questions you need to ask yourself, and maybe diversify your client base. Also, the industry concentration, like we're talking about, like with restaurants, hospitality, travel, things like that. Kathy, what's up?
So I just want to speak a little bit more about your point on insurance risk, right?
Oh,
and
gosh.
from that perspective that not all of us do the same things. So picking a blanket policy from a particular provider is not necessarily going to actually mitigate your risk.
Yep.
So I know when I got my E&O insurance, I actually provided copies of my contracts to the insurance provider so that they made sure that I was covered for the types of services that I provided, because I don't just do bookkeeping.
That is great advice, Kathy. That is great advice. And you know what? That's something I haven't done. So maybe that's something I should do.
Well, and not to mention, Kathy actually did contact somebody who knew about insurance, which is me, because of my background, 17 years. And we broke down the policy. Now, yes, I've been out of the industry for quite some time, but that type of stuff doesn't really change. Like cyber insurance is new that we didn't have back then when I was in it, but I was still able to go through and be like, okay, this is a concern. This is a concern. This is good. This is good. And help her point it out to be able to figure that out. And I, like Kathy, I cannot take just a standard one through CPB Canada, because again, I do so much more and I want more coverage. And a lot of it too is you want to look at the insurance company. So I think one day having somebody, because I still have friends in the industry, I could probably get somebody on to be able to come in and actually talk about it. And again, she would not be from, she's customer service and management, so she's not a sales position at all. So yeah.
That would be very interesting to hear from, because I mean, let's be frank. If you go to an insurance agent and you ask if you need insurance, the answer is always going to be yes. And you need to buy it from me, and you need to buy this and this and this and this and this and this and this.
Well,
That's the way sales goes, right?
Well, they do. And the funny thing is they don't even, they're trained to sell. And that is it. The salespeople are trained to sell. And it's funny, again, this has just come up in the past week or so. I had to basically teach a person, a salesperson in insurance, because I was on the customer service side. So I wanted a policy, a life insurance policy on Elizabeth for 50,000. He said, why 50,000? She was 6 months old. He said, it's going to cost you $5,000 to bury her. And I'm looking at him going, but you're the salesperson. I said, you're a new parent. What parent is in the right state of mind to go back to work right after burying their child? This 50,000 does not just cover the burial costs. It gives us leeway so that we can be in a good mental position when we go back to work and we have that breathing room. And the salesperson, because he was just told, sell, 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 sell for this, sell for that. He wasn't thinking anything else. He was just thinking that. So you're right. If you get a salesperson, they're not going to be looking at the other sides of things. I looked at other sides because I was customer service, and that's what they train the customer service people on, to be able to look from all of these different angles instead of just what's it going to take to get the sale. And most people get the sale because, hey, I can't afford to bury them and pay off their debts. Right.
Yeah.
So it'd be the same, very similar thing here for sure.
Yeah. I'm just going to talk about one last thing about this slide, and we're going to move on. That is security risk. When you're prospecting with a new client, make sure they pass your sniff test. Make sure you don't get an iffy gut feeling. If you do, just say no. Just pass. If somebody asks you to do something that doesn't feel right in your gut, it's your subconscious telling you that something's not right, and you should take that. We did have, and I shared this story with Tanya before, we had a client who's not been a client for many years, who I said, whatever you do, don't hire your best friend or your girlfriend. The first thing he did was hire his girlfriend. We got her suicide note through Dext. By the time we got in touch with him, he was at the hospital with her. She had attempted to take her life. And like, this created a massive trauma for my teammate. It created an absolute panic for me. And like, we knew that this customer was not following our advice. And in the end, when our relationship dissolved, he threatened me with physical violence, and I'm going to come and, I'm going to show up with a couple bikers and kick the crap out of you and all this stuff. It's like, nothing ended up happening, but beware. It didn't smell right from the very beginning. I should have just said no and not taken him as a client. Tanya, you were going to say something.
I was, and this is a whole other topic, but if you actually take a look at the definition of fraud, if we do something that does not feel right in our gut, and we are like, we know this is wrong, no matter how minor, we are an accessory to tax fraud. Bottom line, it is right in there that if we do something, because a lot of people are like, well, the client told me to do this. The client told me to do it.
Does not absolve you of your ethical responsibility.
Exactly. And if
or
they
your
want,
professional responsibility.
and that's exactly it. And if they want, so by putting something through without an HST number on it, and without all of that in there, could open us up. Now, obviously, they're not going to go, oh, that was $2 of an ITC. They're not going to make an example out of that, but that does actually fall into the definition. And one thing that I remind clients of, and I can't wait till I hopefully get to change the way that I say this, is they got Al Capone on tax evasion. Those laws are there for when they want to use them, and they could use them towards us. And are you willing to put your reputation and everything on the risk for one client? No. So just like Jonathan says, trust your gut and don't do it.
Anyway, I could get in another tangent, but I
Like
do
I say,
want to
that's a
get
whole
through
other
this.
topic, right?
Yeah, exactly. So just some useful tools: staying educated and aware of what's going on in the world. Look for official sources and keep up to date on current events. As everybody knows, the budget was released yesterday at 4 o'clock. I still have not reviewed everything, but I am excited about some of the stuff that's coming down for industry. And go to your official sources. My favorite, and we've all heard it, well, my buddy says, my friend says, it's like, I don't understand why people take advice. And the way particularly men approach this with such confidence and such, oh, I'm right because I heard it on Facebook, or I heard it on the radio, or my buddy says. Well, I mean, you can have all the confidence in the world. It doesn't mean you're not wrong. You know what I mean? Like, oh, it's fine to, write off all my groceries. It's like, no, it's not fine to write off all your groceries. I love those conversations because I'm really good at shutting them down real fast and walking away. Regular SWOT analysis. So something that was announced in the budget, just very quiet. Simple tax returns will be capable to be done for free by the CRA in the future. It was part of the budget yesterday. Nobody's talking about that because it's geared towards low income, who are probably not paying for their tax returns anyway. But that's a threat to TurboTax. It's a threat to tax preparers. Something to keep in mind, right? Opportunities are another area where you could, by trying to take advantage of an opportunity, inadvertently create risk. So that regular SWOT analysis and regular business planning, scheduling, understanding capacity. You could have capacity risk going both ways, saying yes too much and not being able to get the work done and having reputational damage, or having too many people on the team, not having enough business coming in the door, and all of a sudden you're taking a financial risk because your business starts bleeding money. After action reviews are something we do regularly. Stakeholder reviews are something we do regularly. And we're constantly trying to improve our systems of checks and balances. Actually, I took a good idea from CPA with regards to good old CSRS 4200. Part of that requirement is we're required as CPA firms to have standards quality manuals by the end of the year for compiled financial statements. Well, hell, great. It all starts with the bookkeeping and work papers. So let's start our standards quality manuals there. And then our team has a place to go back and refer to. They can quote it to customers, and the customers, why can't we just? It's like, this is the policy. Gives them something that they can hold up in front of themselves as a shield and prevent risky behavior. There are other risk assessment tools out there. Does anybody know of any good tools that they'd like to share? Everyone's okay? All right. Last poll question. What is your most concerning risk at the moment?
Okay, hopefully panelists can vote.
Yeah, I voted.
Okay, perfect. Okay. We're almost there. So we'll close the poll in 5, 4, 3, 2, 1. And there we are. There's the results.
Customer or customer concentration risk. I'd be interested to hear more. I'd be interested to hear more if people are willing to share. I picked HR risk because I'm the biggest risk for the company. That's just what it comes down to. There's nobody who can do the things that I do, and that's a problem that needs to be resolved. Does
Yeah.
anybody want to share any of their customer or customer risk concerns?
I have a new customer that, well, I should say new. It's been about a year for me. And so I've got one client, and financial wise, that one client equals about 25 of my regular clients from a funds perspective. And although it's great, it has allowed me to hire another staff person. In the back of my mind is always that what if, right? Even though
Absolutely.
they're telling me they're quite happy with my work and everything like that, but it sits there, like I said, in the back of your mind, just like, oh my God, what if?
Yeah, absolutely. And I mean, from an HR perspective too, you've got one person on your team, Irene.
Yeah.
So what happens if something happens with them?
Yeah.
Right? Who's
no,
going to do their work? Like that's an HR risk we're all taking.
Yeah.
I think anyone with teams. So like I try to keep people at around 80% capacity or less, so that they can do other stuff to build the business, build our policies, build our documentation, and cover when people go on vacation or end up in the hospital or. And yeah, I get what you're saying about that one customer. Wouldn't it be nice to have like 4 of those?
Yeah, and he's actually been asking me. He's got other friends in the industry that are potentially looking to move, and I'm like, again, I'd love to take on another one, but then that's taking on another staff, and because there's a learning curve, like teaching with new staff, right? Like there's always a time involvement in that. And
That's a
so it's
huge.
juggling yourself, right? I mean,
It's a huge HR risk, right? Like, I mean, it takes a lot to develop somebody from walking in the door to being a really productive team member. And let's be honest, an employee does not face the same consequences. They can throw in the towel and walk away today.
Yeah.
And there's nothing you can do about it as an employer. So that's something to keep in mind as we grow our teams, and we're looking for the quality and the character of the people who we're hiring. So another thing to consider. Carol, did you have something you wanted to input?
Oh, yeah, I was just gonna say, yes, the HR risk, because I am like you, I can do it all myself because I don't trust anybody else. So I'm working on
There's
that.
a whole other risk there.
I know, right? No, but honestly, there's a 2-factor fold for that. For one, when I was by myself, and when I fell down in 2004 and ended up in the hospital and found I had a brain tumor and I wasn't doing anything for 6 weeks, I had to scramble to try and mitigate how I was going to continue helping my clients and not lose anybody.